good evening, and I hope you're having a great start to your weekend so far. So we're going to talk about GameStop, and we're going to talk about GameStop in a big way because we're going to go all the way back to 2005. When I saw something on that FTD chart earlier, I noticed they started reporting around 2004. So I figured, based on everything the FTDs have had to do with and how relevant they are, that I'd look into this. So I took a look back into 2005, and what I've found, of course, is going to blow your mind. We're just going to look at 2005 and 2006 and some relevant things that I found during this time frame. And this is going to be a long one. So not as far as this video, but as far as this series, it's going to take a while of digging. But just what I've found so far, I think you're going to find pretty surprising. Let's go ahead and take a look. So this journey, again, just to remind you, a lot of us are sitting here complaining about holding for 6-7 months now. This journey has been going on for 16 years, and you'll see what I mean in a second. So what was going on back in 2005? January 6th, we had earnings come out for GameStop. They killed it. It was that cycle for the end-of-year consoles, kind of similar to what we saw the beginning of this year. Just a annual thing for GameStop. So everything as expected. And the PSP actually had a midnight launch on March 24th of that year. So thinking back to those times, PSP 108.89 apparently used today. So pretty crazy. Now, as far as GameStop and the stock market back in 2005, well, the high of 2005 was 1909. The low was 932. The next year, 2006, they had a high of 29.21 and a low of 15.57. So higher highs, lower lows, overall performing pretty good. This is their chart right here. I'm going to link this PowerPoint below, and this will be available in many languages as well. That way, you can use the resources at your disposal. But you can see here their EPS was 0.98 as of 2005. And their EPS started to tank a little bit. Obviously after the 2008 crisis. But anyways, moving on, participants. But wait, there's more. What's the other thing significant about October 2005? Oh yeah, that's like right when fails to deliver became a thing. Now, look at this. On October 12th, GameStop failed to deliver 1.256 million shares. And if that hasn't blown your mind, this is the grand finale right here. April 10th, 2006, 6 months earlier. Or 6 months later, I'm sorry. This is 6 months later. In connection with this offering of 6,500,000 shares to Citigroup, or with Citigroup, Citigroup may also make naked short sales of shares. Citigroup must close out any naked short position by purchasing shares of Class A common stock in the open market. Yeah, right. A naked short position is more likely to be created if Citigroup is concerned that there may be downward pressure on the price of the shares in the open market after pricing that could adversely affect investors who purchase in the offering. Stabilizing transactions consist of bids for or purchases of shares in the open market while the offering is in progress.